Ladies and gentlemen, how you doing? Matthews here from M&O FOREX Traders. I hope you're doing great. So, I have received this request from a lot of you guys, and I think in the past I've talked about it, right? So, I'm talking about an MPL. A lot of you have asked, please make a video about the MPL. Please make a video about the MPL. So I really don't know the obsession with the MPL, but yeah, let me just show you something. Let me just actually educate you on something right now. So what is an MPL, right? What is an MPL? So literally, what an MPL stands for is just maximum pain level. Okay, this is literally what it means. Maximum pain level. But what does it entail, right? What does it mean? So this is what happens most of the times. Of course, you won't find an MPL everywhere. Trust me, I don't remember the last time I actually traded with an MPL, right? So let me just show you. You have, for example, right? Okay, let me get this level right here. So this is your resistance and this is your support. Okay, so here you have the market pushing to the upside. Okay, creates a high and then it creates a low and then it creates a higher high. Okay, so right here it creates a higher high, it comes to this level right here and then it drops a little bit and then it comes again to this level and then it drops for the third time, for the second time, then it pulls through that level right there. Okay, and then the market comes back again to this level, retests this level, goes up, and then drops, then it retraces back to the same level and it drops. Okay, so let me just delete this support here. All right, so let me just put this nicely. Let me arrange it nicely for you guys. Yeah, so this is the previous trend that you have, higher series of higher highs and higher lows and all that. Okay, and then this is a nice move like that. Let me just put it nicely. Yeah, so do you see what happens here? So when the market is going up, when the market is going up in an uptrend, the market is forming higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and then it comes to this level where the market actually finds resistance at this level right here. So what happens is that once the market finds resistance, it retests that resistance twice. Okay, the market comes to this level and it bounces off. It comes to this level and it bounces off, and the third time it pushes to the upside. So what happens when support and resistance traders see this level right here? When they see this level right there, they'll look at this as a strong level of resistance. Therefore, they would like to sell from that level. And according to support and resistance trade strategy, we sell or buy on the third touch. So as the market is coming back to this level for the third time, most traders would have left their pending orders right there, and some will actually just wait for rejection. And usually what happens is that price would actually try and retrace a little bit after coming to this level right there, and then thereafter price usually breaks this resistance and to push to the upside, breaking this resistance right there. So usually at this level you have R1, which is first resistance. Okay, you have the first resistance there. So let me just delete this. You have the first resistance and the second resistance and the R2. Okay, so usually people will be planning to sell on the third time the market is going to come to this level right here. Okay, so this what it means is that it just takes advantage of those retail traders who are trying to sell here. Remember, when in trading support and resistance, you want to sell on your third touch. So for example, meaning you're waiting for price to actually come here and give you a confirmation, and your price and your stop loss is going to be above there. Okay, so once price comes here for the third time, you're planning to sell here and your stop loss is going to be above there. That's one. Number two, according to support and resistance strategy, once uh, resistance gets broken and it turns into support, people will try and buy this, right? They'll say support turned into resistance, therefore actually it's a good chance for us to actually buy. So therefore we have the breakout traders. Apart from the breakout traders who buy from here, we also have the break and retest traders right there. So once price breaks, they wait for a retest in the same level, making this level even more important. According to them, it actually adds more confluence. Therefore, they'll try to buy from this level. Okay, they'll try to buy here, they'll try to buy here at this level here, and then they're targeting some highs, probably somewhere around there, and their stop loss is going to be below this level here. Okay, so this is, remember, this now has become support, right? So that will be support one. So what you're going to realize is that at this level, this resistance has turned into support. Okay, and then this will act as confluence to those people, those traders who actually trade this strategy, and then they'll try to buy here. And then guess what happens? The market can go a little bit in their favor, and then what happens eventually? Price drops. Okay, price will drop and take them out. Go back, we test that level again. Others again will think of buying, and then the market drops. That's the reason why it's called maximum pain level. What is happening to everyone who was trying to sell here? Because they all had stop losses above here. What happened to them? They got taken out. And this person who was trying, these traders who are trying to buy from this level here, what happened to their stop losses? They were taken out. Okay, so they were taken out. So if you are a same kind of trader that actually want to sell here, you get taken out, and once you try to buy again at this level, you get taken out. How are you going to feel? You're going to feel pain. You're going to experience pain, ladies and gentlemen. Okay, that's the reason why it's called maximum pain level. It's because you get stopped out several times. You get stopped out several times, and then you end up what? Market ends up going in a direction. You wanted to sell here, but price had to take you out first, and then before going to the upside. All right. However, you won't find this setup everywhere. So let me just show you. So that will actually be what we call a mini QML. So for you to actually do that, you're looking for a level where the market has touched that level several times. So you're looking for multiple rejections from that level. So for example, let me just show you an example. So this is, we have the higher high and we have the higher low, and then we have the higher high. So let me just make a dual resistance, and then we have a higher high right there, and then we have a market actually going to the upside, and then we can have something like this. Okay, and then market goes down, and then it might come back, drops, and then come back again, and then usually comes to that level and then drops. Okay, this is just for educational purposes only. So what is happening here? What is happening here? So at this level, this is your MPL here. This is your MPL here. It's your mini QML. So if you look at it, it looks like the big QML setup right there. Okay, it will look like this here. Okay, so what you can do is get a horizontal line and look for levels where the market is actually respecting several times. So get the horizontal line and then look for a level where the market is actually respecting, either from the upside or from the downside. So that's usually where your MPL is. Okay, that's where usually the MPL is. You're going to have rejections from the upside and from the bottom. That's how you identify an MPL. And remember, guys, this MPL won't always be there. You won't find the MPL there every time. It won't always be there. Okay, so this MPL can be below the QML. So this usually is our QML. So it can be below the QML. It can be at the exact same point with the MPL with the QML, or it can be below the QML. All right. So you look for that. So if your MPO is there, well and good, take the trade. However, it's not always going to be there. You have to mind, you have to actually remember that you won't always find the MPO. Sometimes it's there, sometimes it's not there. And uh, don't like don't just stop yourself from taking a trade just because the MPO is not there. All right. Yes, the MPO is important. It's very important, but you won't always find it. You won't always find it, and you can actually have great setups that actually work without the MPL being there. All right. So what determines where the market reverses from is the presence of fresh supply zone. So if this MPL is a fresh supply zone, the market is going to reverse from here. Okay, and this is if the MPL is a fresh supply zone right here. This is where we are going to actually take a trade from. And remember, when you have an MPL, you have your stop loss above the MPL, and you sell, right? If you have an MPL at that particular setup, then you're going to sell from the MPL. However, if you don't have an MPL and you only have the higher high right there, the rally based drop, then your stop loss is going to be above the higher high. That's where you're going to put your stop loss. So always make sure that this higher high right here is a fresh supply zone. So you have to look for a rally base drop supply zone, and this rally base drop supply zone is supposed to be a fresh one. Very important, because once it's not fresh, it means that there will probably be less orders and the market is more likely to just violate that and actually go to the upside. So it's always important to make sure that either that MPL or that rally based drop supply zone is fresh. It's always important, ladies and gentlemen. Okay, and then this, other people call it the fake out zone. Others call it a liquidity zone. So I'll prefer calling it a liquidity zone, because at this level there we expect this liquidity which is lying around that level needs to be taken out. So we always want to make sure that price takes out this liquidity around this level. Once that has happened, then we wait for price to come to our level right there, either at MPL or at the higher high right there, and then we can see price dropping. So it's very important. But remember, the MPL won't always be there. If it's there, it's going to be very visible. You can't miss it if it's there. You can't miss it. All right. So you have beautiful setups even without an MPL. Yeah, beautiful. Okay. So we had a really nice run on Eurocard. Let me just try to show you. It didn't even have the Let's see. Let's go to the 4 hour time frame. Yeah, let me just delete this. Let me go to the 2 hour time frame. Where was that? Where was that set up from? Here. Okay, right here. So let me see. Yeah. So if you look at this, so this is the QML low and higher high break of structure. So I think I remember analyzing this setup. If you've not watched this video, go back and watch it. It's there on our YouTube. Yeah. So this is our QML. This is our QML. So this level right here is our QML, and then this is our low and break of structure right there. So I have a low and break of structure right here. Right here. Okay. And then this is our high. This is our high. Okay. Right there. So what else we're going to look for are rejections. So if you look at this level, we have a lot of rejections from this level right here. We have a lot of rejections from this level right there. So that's our R1 and R2. So this is R1 here. So that's your R1, and this is your R2, and you have your R3 right there. Okay, this was a beautiful trade. This was like a 1 to 8 risk reward ratio. It was a beautiful. We took this out on Monday, and it was amazing. Yeah. So this is the liquidity zone right here. The liquidity zone right there, and then we have the rally base and drop supply zone. So this is the RBD supply zone. Okay, RBD supply zone. Okay, something like that. And then so we sold from here. This one was a really amazing trade, guys. It was a really amazing trade. It was an amazing trade. Yeah. So we caught this trade. Our target was right here. That's where our target was. Okay, then yeah. So usually if the MPL is there, you're going to look for it around this level. So let me just do this. So if the MPL is there, you're going to find it around this level right there. So if we could let's see if we can switch to the line chart. Yeah, here, that's where we could find the MPL. It's really clear. So you could have something like this. So we're going to have something like this where the market goes up and goes down and goes up like that, creates a higher high, and then we're going to find something like this. Okay, then the market goes down. Then we wait for market to come back to that level, and then we sell. So in this case, we really don't have a defined MPO. So it would have been this one right there, where we had a drop, and the market goes up and then drops. So we would have waited for price to actually come to this level right there. So right there. So however, according to my experience, it doesn't actually happen as often as much often as people are expecting it to. It doesn't happen as many times as you guys are actually thinking it does, right? So just continue to identify your structures, like I've shown you. This is very important. So if you have any questions again, please leave them down in the comment section, and I'll get back to you personally. Make sure that you also subscribe, and let me know if you've subscribed in the comment section. Leave a comment section. Leave a comment in the comment section. Let me know if you've subscribed. And then if you have any questions again, please also don't hesitate to actually drop them in the comment section. All right, you guys. Until next time. Goodbye.